Not gonna lie, things are looking pretty tough for the market. So what's going on, guys? It's Ricky with TechBud Solutions. If you've ever watched any of my content, you know that we've continuously talked about the market being incredibly inflated, very overbought, and we were waiting for a pullback. I mean, not only did the market pull on back, but it exceeded my expectation within a very short period of time. Literally everything is dropping. NASDAQ market had single-handedly its biggest red day in 2025, even after market hours during overnight hours. It's down an additional 1.39%. Like, things are bad for the NASDAQ market. And let me be just very blunt. And things can continue to even get worse. You have to understand, a lot of fear is being injected into the market because of this trade war, because of inflation. I mean, we have an inflation report this Wednesday, right? I plan to live stream it for free on my YouTube channel. All you literally need to do is subscribe, and I'm going to go live and we can break it down together. It's 1 hour before the market opens. And this inflation report will tell us if inflation is continuously going up or if the market, is content with what is actually reported. The current inflation rate is 3.3%. We expect it to be right around 3.2%. That's the market's consensus and market's expectation for this Wednesday. If it comes in higher, get ready for markets to drop even further. And then we have a PCE report the following day on Thursday. So again, why are the markets selling off so much? Trade war concerns, just the continuous fear that things will get worse before they get better. And until those concerns go away, we cannot expect that the market's just magically going to find a bottom. Remember, it's all about conditioning. The market's condition right now, the market's sentiment is bearish because of this trade war. And as long as this trade war is still present, fear will continue to get injected into the market, causing more selling pressure. So NASDAQ market, like we said, was 10% away from a recession. Now, after today's sell-off, we are so much closer. From the lows that we made, this thing is down 13%, meaning that we are 7% away from officially or technically entering a recession. For those that do not know, a recession is considered a 20% pullback from previous all-time highs on any of these major markets, NASDAQ, S&P 500, or Dow Jones. The thing that I quickly want to talk about is a very popular stock that a lot of people are bringing up right now. I actually just made a video about it on Instagram, and I break it down. I'm going to break it down in a little bit more detail here. It's Tesla. A lot of people are surprised on why Tesla's crashing. No one should be surprised. Tesla didn't belong at $488. A lot of you guys know that I've said it many times before, and I say this because I want you to know that I've always been pro Elon. I've always been pro Tesla. But Tesla never belonged at $488 per share. It was simply trading before November 5th. It was simply trading at $238. And then all of a sudden, for no reason, the reason was because Elon was affiliated with Trump, and Trump on November 5th was viewed as the president elect, right? The president that won the race. So as soon as that was announced, Tesla began to skyrocket. If you remember, if you've been involved and invested into the market, you know that leading up to November 5th, Tesla was actually on a downturn. Tesla had a robo-taxi event or a cyber roundup, I forgot what they called it, and no one was excited. They released their cyber cab. They had huge and great announcements. I live streamed it, and it was exciting for me. But Wall Street was not impressed. It went from highs of $260 per share to lows of $238. It wasn't until he was affiliated with Trump that this thing began to skyrocket. Well, why? Why would it skyrocket because he's affiliated with Trump? I'm guessing Wall Street just assumed that magically this was going to be great for Tesla. But if you actually think about it, just think. Being affiliated with the Trump administration means that it would simply take him away because he's running DOGE, which is the Department of Government Efficiency. If you just have one brain cell in your head, you would understand that Elon is already stretched so thin with the different companies he's running. Now you expect him to run the Department of Government Efficiency and still think that he's going to be successfully involved in Tesla? Like, it's common sense that it was going to take him away from Tesla. And now it's been this whole kind of like backlash of, oh my God, Elon, I can't believe you're doing this. Well, if you really pay attention to where we're at, to where we were, we're actually not that far off. Tesla was having a terrible 2024. It wasn't until this uptick that Tesla really began to take off. But then again, no one wanted to believe it. Everyone just thought that this thing was going to go to $1,000 per share because Tesla was not just an EV company. It's you're investing into its future. And I get that about projected value. Tesla hasn't produced any of its Optimus robots. Tesla hasn't produced anything that it's said it would actually produce. So you can't factor that in right now. Hopefully in the future it could be $1 trillion company and it can earn it. But when a Tesla goes from lows of 200 to highs of 488, it experiences over a 100% uptick for nothing changing fundamentally. It just makes no sense, right? So now that it's sold off and people are like, oh my gosh, it dropped 50%. I can't believe it. Well, if you really think about it, it never belonged up here anyways. So if anything, from where we were to where we're at right now, if Elon was never affiliated with Trump, we've really just seen about a 7% drop, if I'm not mistaken, because I think it was trading at $240 per share to where we're at right now, about a 7 to 10% drop. Now it doesn't make it, that hard to believe, but it's the people that FOMO'd. It's the people that bought at overbought levels when Tesla was incredibly bullish for no reason, that had no understanding of why Tesla was pushing, that got trapped into this bull trap. This is why it's so important not just to understand the momentum behind a stock, but why it's doing it. And don't get me wrong, there was a lot of money to be made. I know people that made a ton of money during this bull run. And I know the smart ones that took profits because they understood that this was a short-lived positive catalyst. I also unfortunately know people that bought more at the top and have been bag holding ever since. It's unfortunate, but again, it's a tough lesson to learn. Now let's talk about some of the fundamentals very quickly. Why is also Tesla selling off maybe a little bit more? Well, first off, it never belonged up there because it experienced such a positive catalyst that became very overvalued within a short period of time. Just as quick as it runs up, it crashes just as quick. So you can't be surprised by that. Also, fundamentally, it looks like Tesla's facing major sales decline in Germany. Tesla sales in Germany have dropped 76% in February, despite overall EV sales for the entire EV industry are up 31%. So Tesla is losing more of the marketplace. CEO Elon Musk, political involvement seems to have hurt the brand's popularity. Surprise, surprise. You can't be surprised by that. And Tesla has also faced declines in China and several European markets. Again, not much of a surprise. If we continue to look into this, this is based off of market cap valuation, what Tesla was valued at $942 billion, if I'm not mistaken. But this is how much of sales volume Tesla actually has in the market. So imagine having this much based off of market cap valuation, nearly at $1 trillion, and it's lost more than that already. But again, you only run about 1.8% of the overall sales volume. Simply, it became very overinflated. But we've known this about Tesla. If you've paid attention to Tesla stock, you understand that it's a very overhyped up stock. It's a very volatile stock. It's one of the most popular and heavily traded stocks in the stock market consistently day after day in and day out. So you shouldn't be surprised by that. But again, it's the people that just got into the market, that were buying at all-time highs, that got through that euphoria phase, that are now paying the price. Well, hopefully now you know, right? Now going a little bit more into it. Today, Elon Musk is left with $319 billion. Again, still a ton of money. Today alone, he lost $22.8 billion just because of the sell-off today. And the overall markets got liquidated and lost $1.75 trillion. Of course, as the overall markets sell off, they lose market cap value, and that's the number that we lost today. Tesla has lost 45% of its value year to date, and overall 15% today alone. Again, it's been a tough time for Tesla and for Elon. And in my opinion, if you are asking a very simple question, Ricky, is now a good time to buy Tesla? I would like you to ask yourself two questions. If your intention is, well, the question would be, are you trying to make money right now? And if that's the case, then in my opinion, no, I do not believe Tesla is a good buy right now at 200. It's not because of the price, it's because of the sentiment. Tesla direction is bearish. And if your intention is to make money right now, then your focus should be on stocks that are actually increasing in value right now. You cannot expect that just because you buy and a stock looks cheap, that naturally it's just going to find a support, it's going to bottom and then begin to recover because you purchased 100 shares. No one cares about how many shares you're buying. It has no effect nor influence to the overall market. So be mindful of that. Be intentional and be open-minded. Be real with yourself. You can't just think about how much money you're going to make and not take downside risk into consideration. It will be the end of you in this market. But if you're an investor and you have no intention of making money now, but you simply want to get Tesla at what you see to be at a fair price, then yes, Tesla possibly could be a good buy right now as a long-term investment because, again, it does have a history of trading at $300, $400, sometimes even close to $500 per share. But you cannot expect that to happen soon. So a very simple message I always like to share with our beginners, and it's, again, there's nothing wrong with buying it now. Just watch how much you buy, and you have to be able to tolerate the time that it will take for Tesla to sell off, find its support, and begin to recover. If you cannot tolerate a downturn, then do not buy a stock while it's still selling off. It's common sense. The two things that I want to share with you that I shared with you in my video on Saturday is if you do intend to buy the dip on any stock as markets are dropping, please watch your position size and do not buy too much because, again, markets can continue to get worse. Second, please do not buy using margin. I don't want you to get margin called, and you should never be borrowing money when buying the dip on a stock while the markets are still selling off. Margin or leverage is supposed to be used during upticks while markets are increasing in value, not during downturns. It's going to be the worst thing that you do because if you borrow money to buy a stock right now and it continues to sell off, you're literally borrowing money to lose more money, and you're going to use and lose that leverage. So please look out for yourself. You can't just think about the upside. You always have to take into consideration the downside. With that being said, there's a lot going on in the market. It feels very chaotic, but this is exciting. This is where big money can be made, not now, but again, in preparation and doing so. So again, a very simple question you can ask yourself. What is one or maybe three stocks that you expect to buy the dip on? And how do you plan to do it once markets begin to show signs of potential recovery? But remember, conditions have to change. They will not just magically begin to recover. It's the sentiment has to change. Things have to get better before, or things can get worse before they get better. So again, the sentiment would be that we no longer have this trade war concern, or that inflation is under control, or if the Federal Reserve just comes for the saving, that the Federal Reserve starts to aggressively cut interest rates. That would create a huge positive catalyst for the overall market, because when they start cutting interest rates, they make it cheaper to borrow money for yourself and for businesses, and therefore artificially boosting the economy because it's cheaper to borrow money, just like they did in 2020 to 2021. So I'm very excited to follow up. Again, everything is dropping right now. It's not just your portfolio. Keep it light, keep it tight, stay calculated, and be intentional. Remember, my job here is always to be upfront with you guys and to explain to you exactly what I see that is going on. You might not always like to hear it, but again, it's better to understand and be aware of what is going on with the market than to blindly just buy something and hope for the best, right? Be intentional, be calculated. I hope to see you for tomorrow's live trading session. And if you ever want to tune on in to watch me trade live, I go live right at market open, and it's the second link in the description down below. If you sign up today, you can watch me trade live as soon as tomorrow. Like always, let's make sure that we end the year on a green note. Take care, team.